Hi everyone, this is your daily 10-minute business and finance news wrap for this Tuesday, the 27th of April 2021. Later, why closed international borders will hit our economy, but first a warning to used car buyers, especially younger buyers, those in the ages between 18 and 24, because the ACCC says scammers are using rising used car prices to target vulnerable buyers. Aussies have already lost $288,000 to vehicle scams in just the first quarter of this year, and that's more than in all of 2019. So for more, I spoke earlier with the ACCC's Deputy Chair, Delia.
The main people who are being scammed with this are young people, particularly 18 to 25, who probably, worked for quite a few years to save the money for their first car, and like that, it's gone.
Why is this happening at such elevated levels?
I think there's a couple of reasons. First of all, we know that there's been a shortage of new cars during COVID because of a whole range of production line issues. This has driven up the price of second-hand cars. Plus, it's easier for people to make excuses about why you can't meet in person to actually get the car. And that has just been a toxic combination when it comes to the ability of scammers to, in fact, scam you.
How is this scam actually happening?
What we're seeing is the scammers are putting ads on real sites, Facebook Marketplace, car sales, Auto Trader, Gumtree, those sorts of sites. They'll advertise a popular model car. The studies I've seen, they all seem to be around about 2015, 16, 14. They have really attractive prices. And in 97% of the cases we've seen this year, they have said they're with the Defence Forces, often female, interestingly. I think that might engender more trust. They're about to be deployed overseas. They're based in Darwin or somewhere where it's impossible for you to get to. And so they say, yes, you can have it for this price, and so that you trust me and know it's not a scam, you can put the money straight into an escrow account, which is an account where they will keep the money until you say you've got the car and the car is okay, and then the money will go to the scammer. The escrow accounts look like legitimate. They have legitimate names, but they are in fact fakes created by the scammer. You send the money, and money actually goes straight to the scammer, and you never see the car.
So how do consumers protect themselves?
Look, there's a few things to do. If a car seems like a too good to be true price or really, really cheap, that should put all your warning bells on notice. If they talk about, using this escrow account, most of them do, go and find the legitimate contact details for this escrow account, contact them and say, is this a legitimate customer of yours? One of the ones they talk about, which is an eBay one, is in fact only available in the US, so you can know straight away that it's not legit. One of the other things they're doing with this scam is ID theft. They're asking for driver's license, Medicare numbers, that sort of thing. And we've had complaints from people who've not only been scammed out of their car money, but have had fake bank accounts set up. So do not share any more personal information with the person you're dealing with than you absolutely have to, which is really your name and address.
And finally, what do you think the responsibilities are of these websites like your Facebook Marketplace and your car sales or cars guide?
Look, they have a responsibility to try to keep scammers off. Certainly, if you have been scammed on these sites, it's really important that you give them all the details, which will help them to do it, and they need to have processes in place.
Delia, Ricardo there, the ACCC Deputy Chair. Now, international border closures will be a big impediment to economic growth. That's according to the CommSec's State of the State report, which ranks Tasmania as the #1 performing state or territory. For more, I spoke earlier with Craig James, Chief Economist at CommSec. Craig, Tasmania is at #1 in your report. Why?
Well, basically it gets down to population growth, and this has been something that's been happening for quite a number of years, the ramp up in terms of population. Even today, the 1% annual growth of population is 60% above the normal or decade average for Tasmania. That means a lot of extra people either building or buying sort of homes, spending their money, and also the demands on the infrastructure, roads, schools, and hospitals and the like.
Any surprises?
I think the biggest surprise is the strength of the Western Australian economy. They're coming down from 6 on the leaderboard now to 3rd, and this is the best reading we've seen for Western Australia in around about 6 years. we can put it down to the fact that home building is going gangbusters in Western Australia together with the mining sector.
Craig, how does this report reflect the way the states have responded to COVID, and has there been any missed opportunities?
Well, probably not the way that the states have responded to COVID, but the impact of COVID on the individual states and regions. And particularly in terms of COVID, it's been the closure of the foreign borders, the fact that sort of migrant inflows have dried up. And that's had a really big impact on the New South Wales economy. In fact, population growth in New South Wales is the slowest in 25 and a half years, and that's had knock-on effects to other parts of the economy.
So is it fair to say that international border closures here in Australia is one of the biggest threats to continued economic growth?
Well, certainly that is the big focal point, so the closure of the foreign borders, open for New Zealand but closed for everyone else. And if population growth continues to weaken, inevitably that's going to have an impact in terms of reduced demand for homes, either buying homes or building homes, reduced demand for retail services, for service expenditure more generally. And it also has an impact in terms of transport sort of infrastructure. So this is the big thing that we want to see sort of improve over time, the opening up of foreign borders, and they get back to a degree of normality sort of here in Australia.
Craig James there, the Chief Economist at CommSec. Now to the Australian share market, which did fall today. The S&P ASX 200 at 7,033. That's down 0.2%. Technology stocks were weaker. Zip down by 6.3%. Afterpay 5.5% down. The banks were mixed, but the miners did well. For more on the day's market action, I spoke earlier with Jessica Amir, market analyst at Bell Direct. Jess, the market is down today. Why and who led the losses?
Well, it's the second day of losses for the Aussie share market, and I guess it's for a couple of important reasons. Firstly, we're starting to see what's called tax loss selling. Now, this usually happens ahead of end of financial year. Traders and investors lock in profits, and given that the market is at a 13-month high, they crystallise their gains or they crystallise their losses. So this explains why the tech sector was sold down the most today, because the tech sector is up the most this financial year, up about 75%. The second reason the market fell into the red today, the Aussie dollar. It's back at 3-year highs. Great for travelling. Can't really do that at the moment, but it's not good for Aussie companies who export. Think A2 Milk. Now, that was one of the worst performers on the ASX today. The third and final reason, I guess, we fell into the red was some disappointing company news. Now, Nickel Mines, for instance, one of Australia's biggest nickel exporters, reported a bit of disappointing news today. Quarterly earnings and sales fell, but it's important to note that they fell from their prior record. So this is really important, I guess, to reflect on this. It's also important, Ricardo, as well, to reflect, although the market has seen selling for the past 2 days, the market is on pace for its best monthly gain in 6 months, and so far the market is up almost 4% in April.
The Australian dollar broke through 78 US overnight. Why?
Well, it was all for a trifecta of reasons. Of course, we've got the mining boom, the iron ore price back at 9.5-year highs, not really showing any signs of slowing down. Now, the China fears, there's talk that those fears could be overblown, so China is back red hot, fueling demand. We're also seeing weakness in the US dollar. Now, the US dollar is seen as a safe haven, so we've seen investors rotate out of the US dollar and into equities. And this is, of course, when the US dollar is sold down, it supports the Aussie dollar to move higher. It's important to note the Aussie dollar is trading at its highest level since Feb, and it's also on pace for a 3-year high. Now, this makes our exports commodities more expensive. Yes, you're right, we did hit 78 cents overnight, so this is not so good for our exporting companies, so we'll keep our eyes on those.
In terms of equity news, a couple of big mergers on the cards.
It's nothing new for the market to churn and for takeovers to occur after a bear market. I guess if you reflect on the GFC, we did see about 40% of the top 100 companies disappear completely from the ASX. And today, I guess we're continuing what we've been seeing over the last year or so since the COVID-19 pandemic. In one corner today, we had Bingo being taken over by Macquarie's infrastructure business for over $2 billion. In the other corner, Tabcorp. They received some takeover offers for their wagering and media unit in the order of over $3 billion. So lots to digest. Expect more takeovers to come.
And given where we are in the market, where do you guys see the opportunities?
Well, there's plenty of opportunities. Well, I guess we're expecting more tax loss selling to come for the next 2 months. So I'd be keeping my eyes and ears pretty low to the ground. If you do see opportunities in some of those low-hanging fruit, it's always a good idea to average into the market. But we're looking at 2 sectors at the moment. So iron ore, it's likely to continue to deliver the goods, and also those undervalued travel and tourism stocks. Yes, there's of course a risk on the table. We don't know when international travel will get up and running again, but for the long-term investor, if you're willing to stay the course and be patient, there could be some potential life-changing investments ahead for you.
Jessica Amir there from Bell Direct. That is SBS On The Money for this Tuesday. You can follow me on Twitter and Instagram at Business Ricardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.